The phrase mobile commerce was originally coined in 1997 by Kevin Duffey at the launch of the Global Mobile Commerce Forum, to mean the delivery of electronic commerce capabilities directly into the consumer, a Euro unregistered trademark's hand, anywhere, via wireless technology. Many choose to think of mobile commerce as meaning a retail outlet in your customary Euro unregistered trademark's pocket. Mobile commerce is worth $230 billion, with Asia representing almost half of the market, and has been forecast to reach $700 billion in 2017. According to BI Intelligence in January 2013, 29% of mobile users have now made a purchase with their phones. Walmart estimated that 40% of all visits to their internet shopping site in December 2012 was from a mobile device. Bank of America predicts $67.1 billion in purchases will be made from mobile devices by European and U.S. shoppers in 2015. Mobile retailers in UK alone are expected to increase revenues up to 31% in FY 2013, a Euro 14. History: the Global Mobile Commerce Forum, which came to include over 100 organisations, had its fully minuted launch in London on November 10, 1997. Kevin Duffey was elected as the executive chairman at the first meeting in November 1997. The meeting was opened by Dr. Mike Short, former chairman of the GSM Association, with the very first forecasts for mobile commerce from Kevin Duffey and Tom Alexander. Over 100 companies joined the forum within a year, many forming mobile commerce teams of their own, for example MasterCard and Motorola. Of these 100 companies, the first two were Logica and Cellnet. Member organizations such as Nokia, Apple, Alcatel, and Vodafone began a series of trials and collaborations. Mobile commerce services were first delivered in 1997, when the first two mobile phone-enabled Coca-Cola vending machines were installed in the Helsinki area in Finland. The machines accepted payment via SMS text messages. This work evolved to several new mobile applications, such as the first mobile phone-based banking service was launched in 1997 by Merita Bank of Finland, also using SMS. Finnair Mobile Check-in was also a major milestone, first introduced in 2001. The M-Commerce (TM) server developed in late 1997 by Kevin Duffey and Andrew Tobin at Logica won the 1998 Financial Times Award for Most Innovative Mobile Product, in a solution implemented with De La Rue, Motorola and Logica. The Financial Times commended the solution for turning mobile commerce into a reality. The trademark for M-Commerce was filed on April 7, 2008. In 1998, the first sales of digital content as downloads to mobile phones were made possible when the first commercial downloadable ringtones were launched in Finland by Radilinja. Two major national commercial platforms for mobile commerce were launched in 1999, Smart Money in the Philippines, and NTT Docomo's iMode Internet service in Japan. iMode offered a revolutionary revenue-sharing plan where NTT Docomo kept 9% of the fee users paid for content, and returned 91% to the content owner. In 1999, inventors Jukka Salonen and Seppo Väinön left TeliaSonera to form Bookit and extended the capabilities of the standard SMS to enable interactive functionality. Salonen continued the work and in 2001 introduced a version which included embedded two-factor authentication and session management under the trademark of Intelligent SMS, which enabled more sophisticated business applications, including an upgrade to Finnair's pioneering mobile check-in service. These improvements made it possible to develop more sophisticated business applications supporting secure mobile transactions such as mobile ticketing, actionable fraud alerts, and one-click purchasing. Mobile commerce-related services spread rapidly in early 2000. Norway launched mobile parking payments. Austria offered train ticketing via mobile device. Japan offered mobile purchases of airline tickets. In April 2002, building on the work of the Global Mobile Commerce Forum, the European Telecommunications Standards Institute appointed Joachim Hoffmann of Motorola to develop official standards for mobile commerce. In appointing Mr. Hoffmann, ETSI quoted industry analysts as predicting that m-commerce is poised for such an exponential growth over the next few years that could reach $200 billion by 2004. The first book to cover mobile commerce was Tomi Ahnen's M-Profits in 2002. The first university short course to discuss mobile commerce was held at the University of Oxford in 2003, with Tomi Ahnen and Steve Jones lecturing. As of 2008, UCL Computer Science and Peter J. Bentley demonstrated the potential for medical applications on mobile devices. PDAs and cellular phones have become so popular that many businesses are beginning to use mobile commerce as a more efficient way to communicate with their customers. In order to exploit the potential mobile commerce market, mobile phone manufacturers such as Nokia, Ericsson, Motorola, and Qualcomm are working with carriers such as AT&T Wireless and Sprint to develop WAP-enabled smartphones. Smartphones offer fax, email, and phone capabilities. Profitability for device vendors and carriers hinges on high-end mobile devices and the accompanying killer applications, said Burchett. Perennial early adopters, such as the youth market, which are the least price-sensitive, as well as more open to premium mobile content and applications, must also be a key target for device vendors. Since the launch of the iPhone, mobile commerce has moved away from SMS systems and into actual applications. SMS has significant security vulnerabilities and congestion problems, even though it is widely available and accessible. In addition, improvements in the capabilities of modern mobile devices make it prudent to place more of the resource burden on the mobile device. More recently, brick-and-mortar business owners, and big-box retailers in particular, have made an effort to take advantage of mobile commerce by utilizing a number of mobile capabilities such as location-based services, barcode scanning, and push notifications to improve the customer experience of shopping in physical stores. By creating what is referred to as a bricks-and-clicks environment, physical retailers can allow customers to access the common benefits of shopping online while still shopping in the physical store. This is seen as a bridge between the gap created by e-commerce and in-store shopping, and is being utilized by physical retailers as a way to compete with the lower prices typically seen through online retailers. By midsummer 2013, omnichannel retailers were seeing between 25% and 30% of traffic to their online properties originating from mobile devices. Some other pure-play online-only retail sites as well as flash sales sites and deal sites were seeing between 40% and 50% of traffic originate from mobile devices. The Google Wallet mobile app launched in September 2011 and the m-commerce joint venture formed in June 2011 between Vodafone, O2, Orange and T-Mobile are recent developments of note. Reflecting the importance of m-commerce, in April 2012 the Competition Commissioner of the European Commission ordered an in-depth investigation of the m-commerce joint venture between Vodafone, O2, Orange and T-Mobile. A recent survey states that 2012, 41% of smartphone customers have purchased retail products with their mobile devices. Products and services available. Mobile money transfer in Kenya money transfer is mainly done through the use of mobile phones. This was an initiative of a multi-million shillings company in Kenya named Safaricom. Currently, the companies involved are Safaricom and Airtel. Mobile money transfer services in Kenya are now provided by the two companies under the names M-Pesa and Airtel Money respectively. A similar system called Mobile Pay has been operated by Danske Bank in Denmark since 2013. It has gained considerable popularity with about 1.6 million users by mid-2015. Mobile ATM with the introduction of mobile money services for the unbanked, operators are now looking for efficient ways to roll out and manage distribution networks that can support cash in and cash out. Unlike traditional ATM, SIOCAP mobile ATM have been specially engineered to connect to mobile money platforms and provide bank-grade ATM quality. In Hungary, Vodafone allows cash or bank card payments of monthly phone bills. The Hungarian market is one where direct debits are not standard practice, so the facility eases the burden of queuing for the postpaid half of Vodafone a unregistered trademark S subscriber base in Hungary. Mobile ticketing Tickets can be sent to mobile phones using a variety of technologies. Users are then able to use their tickets immediately, by presenting their mobile phone at the ticket check as a digital boarding pass. Most number of users are now moving towards this technology. Best example would be IRCTC, where ticket comes as SMS to users. Mobile vouchers, coupons and loyalty cards. Mobile ticketing technology can also be used for the distribution of vouchers, coupons, and loyalty cards. These items are represented by a virtual token that is sent to the mobile phone. A customer presenting a mobile phone with one of these tokens at the point of sale receives the same benefits as if they had the traditional token. Stores may send coupons to customers using location-based services to determine when the customer is nearby. Content purchasing delivery. Currently, mobile content purchasing delivery mainly consists of the sale of ringtones, wallpapers, and games for mobile phones. The convergence of mobile phones, portable audio players, and video players into a single device is increasing the purchasing delivery of full-length music tracks and video. The download speeds available with 4G networks make it possible to buy a movie on a mobile device in a couple of seconds. Location-based services. The location of the mobile phone user is an important piece of information used during mobile commerce or m-commerce transactions. Knowing the location of the user allows for location-based services such as local discount offers, local weather, tracking and monitoring of people. Information services. A wide variety of information services can be delivered to mobile phone users in much the same way as it is delivered to PCs. These services include news, stock quotes, sports scores, financial records, traffic reporting, emergency alerts, customized traffic information, based on a user's actual travel patterns, can be sent to a mobile device. This customized data is more useful than a generic traffic report broadcast, but was impractical before the invention of modern mobile devices due to the bandwidth requirements. Mobile banking. Banks and other financial institutions use mobile commerce to allow their customers to access account information and make transactions, such as purchasing stocks, remitting money. This service is often referred to as mobile banking, or m-banking. Mobile brokerage. Stock market services offered via mobile devices have also become more popular and are known as mobile brokerage. They allow the subscriber to react to market developments in a timely fashion and irrespective of their physical location. Auctions. Over the past 3 years, mobile reverse auction solutions have grown in popularity. Unlike traditional auctions, the reverse auction bills the consumer's phone each time they place a bid. Many mobile SMS commerce solutions rely on a one-time purchase or one-time subscription. However, reverse auctions offer a high return for the mobile vendor as they require the consumer to make multiple transactions over a long period of time. Mobile browsing. Using a mobile browser a World Wide Web browser on a mobile device customers can shop online without having to be at their personal computer. Many mobile marketing apps with geolocation capability are now delivering user-specific marketing messages to the right person at the right time. Mobile purchase. Catalog merchants can accept orders from customers electronically, via the customer's mobile device. In some cases, the merchant may even deliver the catalog electronically, rather than mailing a paper catalog to the customer. Consumers making mobile purchases can also receive value-add upselling services and offers. Some merchants provide mobile websites that are customized for the smaller screen and limited user interface of a mobile device. An application. Mobile phone payments. Payments can be made directly inside of an application running on a popular smartphone operating system, such as Google Android. Analyst firm Gartner expects in-application purchases to drive 41% of App Store revenue in 2016. In-app purchases can be used to buy virtual goods, new and other mobile content and is ultimately billed by mobile carriers rather than the app stores themselves. Eric Zorn. Euro unregistered trademark SIPX mobile commerce system is used by 120 mobile carriers to offer payment options such as try before you buy, rentals and subscriptions. Mobile marketing and advertising equals. In the context of mobile commerce, mobile marketing refers to marketing sent to mobile devices. Companies have reported that they see better response from mobile marketing campaigns than from traditional campaigns. The primary reason for this is the instant nature of customer decision-making that mobile apps and websites enable. The consumer can receive a marketing message or discount coupon and, within a few seconds, make a decision to buy and go on to complete the sale, without disrupting their current real-world activity. For example, a busy mom tending to her household chores with a baby in her arm could receive a marketing message on her mobile about baby products from a local store. She can, and within a few clicks, place an order for her supplies without having to plan ahead for it. No more need to reach for her purse and hunt for credit cards, no need to log into her laptop and try to recall the web address of the store she visited last week, and surely no need to find a babysitter to cover for her while she runs to the local store. Research demonstrates that consumers of mobile and wireline markets represent two distinct groups who are driven by different values and behaviors, and who exhibit similar psychographic and demographic profiles. What aspects truly distinguish between a traditional online shopper from home and a mobile on-the-go shopper? Research shows that how individuals relate to four situational dimensions: place, time, social context and control determine to what extent they are ubiquitous or situated as consumers. These factors are important in triggering m-commerce from e-commerce. As a result, successful mobile commerce requires the development of marketing campaigns targeted to these particular dimensions and according user segments. Influence on youth markets. Mobile media is a rapidly changing field. New technologies, such as WeMax, act to accelerate innovation in mobile commerce. Early pioneers in mobile advertising include Vodafone, Orange, and SK Telecom. Mobile devices are heavily used in South Korea to conduct mobile commerce. Mobile companies in South Korea believed that mobile technology would become synonymous with youth lifestyle, based on their experience with previous generations of South Koreans. Profitability for device vendors and carriers hinges on high-end mobile devices and the accompanying killer applications, said Gibran Burchett. Memetic research equals. Levius Rolando, John Sokol and Gibran Burchett are memetic researchers who pioneered mobile advertising with their early experimentation of DVBH in 1999 with Sony BMG recording artist Wu-Tang Clan. On a 2007 trip to South Korea, Rolando created a Venn diagram model of rapidly evolving youth lifestyle trends. The diagram explained vital aspects of mobile adoption and sales of mobile global products and services. Rolando and his colleagues performed an experiment in which viral marketing, in the form of mobile commercials, was used to attract and retain an audience. The two tested a theory of rapid memetic dissemination. They observed the youth cultural styles and trends, combined with the rate at which the test subjects passed on particular information to others. One group of subjects were given words and phrases to be used regularly in conversation. The control group was not given such a list. This experiment measured the rate at which ideas and phrases were typically transmitted. Rolando conducted other experiments in Europe, South Korea, and Japan involving viral mobile direct marketing campaigns delivering products and coupons with instant savings to mobile devices. These studies were commissioned by top mobile providers like Deutsche Telekom and Orange. The experiments used disc jockeys and mobile youth street teams to drive instant purchases of event ticket sales, and the sales of 3 different viable youth products to over 200,000 end users in 8 days. This demonstrated how the global youth mobile market can react autonomously and create trends. It also showed how products take on new life because of the mindset of the young, who tend to be early adopters of any form of social technology services. These researchers, along with others, developed methods deployed globally through concerts and events involving any form of youth culture in 2008, in partnership with leading mobile software and network providers. Levius and others members of trendwatching.com defined content generation, a description of those born of the digital age of content and how their brains were rewired to think in real-time content exchange. The term is now globally. The Generation C phenomenon captures an avalanche of consumer-generated content that is building on the web, adding petabytes of new text, images, audio and video on an ongoing basis. The two main drivers fueling this trend? The creative urges each consumer undeniably possesses. We're all artists, but until now we neither had the guts nor the means to go all out. The manufacturers of content creating tools, who relentlessly push us to unleash that creativity, using their ever cheaper, ever more powerful gadgets and gizmos. Instead of asking consumers to watch, to listen, to play, to passively consume, the race is on to get them to create, to produce, and to participate. Payment methods. Consumers can use many forms of payment in mobile commerce, including premium rate telephone numbers, which apply charges to the consumer's long-distance bill. Mobile operator billing allows charges to be added to the consumer's mobile telephone bill, including deductions to prepaid calling plans, credit cards and debit cards. Some providers allow credit cards to be stored in a phone's SIM card or secure element. Some providers are starting to use host card emulation, or HCE. Some providers store credit card or debit card information in the cloud, usually in tokenized. With tokenization, payment verification, authentication, and authorization are still required, but payment card numbers don't need to be stored, entered, or transmitted from the mobile device ISMS. Micropayment services, stored value cards, often used with mobile device application stores or music stores. See also, e-commerce, mobile banking, mobile commerce service provider, mobile dial code, mobile marketing, mobile payment, mobile ticketing. References. Further reading, Terence, Couture. How designers and brands are marketing themselves in the mobile commerce era. Tiwari, Rajesh. Buse, Stefan. Herstadt, Cornelius. From Electronic to Mobile Commerce, Opportunities Through Technology Convergence for Business Services. Asia Pacific Tech Monitor 23, 38 to Euro 45. Retrieved August 23, 2010. Harold, Dory. Theories of Mobile Commerce Apps Development. Hillman. A.L. Soft Trust and McCommerce Shopping Behaviors. Proceedings of the International Conference on Human-Computer Interaction with Mobile Devices and Services. Troutman, Marcy. Timpson, Steve. Effective Optimization of Websites for Mobile Access, The Transition from E-Commerce to McCommerce. Journal of Interactive Advertising 9, 65 a Euro 70. ISSN 1525-2019. Retrieved August 23, 2010. Green, Rory. Concessions One Button Away. Kentucky Colonel. Jordan, Jim. New Arena Service Testing Delivery to Your Seat. Herald Leader. Sharma, Sulab. Gusha Copywriter REZ, Jairo Alberto. An Evaluation Framework for Viable Business Models for M-Commerce in the Information Technology Sector. Electronic Markets, The International Journal on Networked Business 20, 33 a Euro 52 doi, 10.1007 per second 12525-010-0028-9. ISSN 1422-8890. Constant Info, blog. Mobile Commerce a Euro An Altered Online Shopping Experience 2015 inches.